FIs are not aggressively buying India right now. And no, it is not because India is weak. It is not because the economy is broken. And it is definitely not because one of the headlines or event. The real reason is far more uncomfortable. Let's break it down calmly. So India's macro story is strong. Growth is resilient. Earnings are stable. Domestic participation is high. So naturally the question arises. If everything looks fine, why is foreign money still cautious? Because FIs don't invest based on stories. They invest based on relative opportunity. And right now, India is expensive. Not in absolute terms, but compared to alternatives. After a strong run, Indian equities are trading at premium valuations. Now, that is not a problem for long term investors. But for global funds allocating capital across countries, it changes the map. So when the valuation stretch, FIs slow down, even if fundamentals remain intact. Now, layer in the global context. Liquidity is not flooding everywhere equally, it is selective. Money is flowing where risk adjusted returns look asymmetric. And at this moment, FIs are waiting, not fleeing. Now, that distinction is critical. They are not dumping India, they are pausing, watching how global rates, US markets, and currency dynamics evolve. Another factor most retail investors miss is currency risk. For FIs, returns are not just about the stock prices, they are also about the currency stability. If global uncertainty rises, FIs become extremely cautious about the emerging market currency, even the strong ones. Now, that does not mean panic, it means patience. And here is where retail investors misread the situation. They assume FIs are not buying, something must be wrong. That is usually incorrect. In many cycles, FIs return after the volatility shakes out the weak hands, not before. So, what does this mean for you as an Indian investor? First, you should not chase momentum blindly just because the index is near highs. Secondly, you should understand that sideways phases are normal after the strong run. And third, FIs returning is a confirmation, not a prerequisite. Markets don't move in straight lines, they rotate, digest, and reset. This phase is not about fear, it is about discipline. And the investors who understand that usually outperform the ones chasing the headline. If you want clear, logic driven explanations of the Indian and the global markets without noise, hype, or fear, subscribe to this channel because in investing, understanding why money waits is often more important than knowing when it moves. Thank you.